So you have to prepare 6 entries in the books of hire purchaser, that is in the first year. They have not given cash price of the asset. As usual, like hire purchase system, we have to calculate the cash price of the asset. Depreciation account data to asset account, and that depreciation has to be transferred to profit and loss account. Third entry is for interest due. So your entry is interest account data to interest suspense account. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the third session of Unit 3 of the subject Financial Accounting 1, and this is for first sem BCom student. So your Unit 3 is all about accounting for installment system. So already we have learned few of the theory concepts, also we have solved few of the problems. So let us quickly recall what we have discussed in a previous session. So in a previous session, we have seen what is the journal entries in the books of installment purchaser. So we have seen the format. That is, what is the format of journal entries in the books of installment purchaser. So same like hire purchase system. So only thing is that we have to make changes in interest suspense account. So what are the entries that has to be prepared in the books of installment purchaser? So your first entry is for purchasing of assets. So your entry will be asset account data, interest suspense account data to installment seller account. And your second entry as usual for making the down payment. So your entry will be installment seller account data to bank account. And the third entry is for interest due. So your entry is interest account data to interest suspense account. And your fourth entry is for installment paid. So installment seller account data to bank account. And your fifth entry is for charging depreciation account data to asset account. And your last entry is for transferring interest and depreciation to profit and loss account. So your entry will be profit and loss account data to interest account to depreciation account. So this is a first year entry. So you have to prepare 6 entries in the books of hire purchaser, that is in the first year. Next, all the years you are going to prepare only, or you are going to record only 4 entries, that is for interest due, installment paid, as well as depreciation charge and transfer of interest and depreciation to profit and loss account. And in our previous session we had solved a problem that is relating to journal entries in the books of installment purchaser. That is problem on installment purchase system, where we have learned how we are going to record journal entries in the books of installment purchaser. In today's session, we shall continue with a new problem on 1/1/2006. So as I told, so this date is very important because we are going to make the payment in installment. So on 1/1/2006, Ambika Tourist purchased a luxury bus. Now, who is Ambika Tourist? So since we are going to record entries in the installment system, so Ambika Tourist is installment purchaser. Purchased a luxury bus. Now what is the asset? Luxury bus on installment system from Tata Motors. Now who is Tata Motors? Installment seller. The terms of payment were as follows. Let us see what are the conditions. Down payment on signing the agreement rupees 80,000. Now they have not given the cash price of the asset, but they have given the down payment. So what it is? Down payment, how much? 80,000. At the end of 2006, that is at the end of first year, so they have made how much? 1,64,000. So they have paid 1,64,000. At the end of second year, that is 2007, 1,52,000. And at the end of third year, that is 2008, 1,20,000. And at the end of fourth year, 2009, they have paid 1,10,000. The Tata Motors charge interest as 10% per annum. What is the rate of interest? 10% per annum. Ambika Tourist provide depreciation at 10% per annum. Here they have given rate of interest is 10% and depreciation to be charged at 10% on straight line method. Now what type of or which method is following in order to calculate the depreciation? Straight line method. Ascertain the cash price of the bus. So we don't know what is the cash price of the bus. First we have to calculate cash price of the bus including these installment amount. Now this installment amount includes interest also. Clear? So whenever they give this type of problem where we have to calculate cash price of the asset, it means that this installment amount is inclusive of interest. Prepare luxury bus account and Tata Motors account, depreciation account and interest suspense account in the books of Ambika Tourist. So, who is Ambika Tourist? Installment purchaser. So, in the books of installment purchaser, we have to prepare ledger account. So, which are the ledger accounts to be prepared? Luxury bus account, Tata Motors account, depreciation account and interest suspense account. Now, this is a question where they have not given cash price of the asset. As usual, like hire purchase system, we have to calculate the cash price of the asset. So, how to calculate the cash price of the asset? We have to go from fourth installment first. So, we have to write the fourth installment, less interest, then add third installment, less interest, next add second installment, less interest, add first installment, less interest, then add down payment, we will get the cash price of the asset. Let us see how we are going to calculate the cash price. Now, this is a working note where we are going to calculate the cash price of the asset. So, let us calculate the cash price of the asset. Now, take the last installment, that is fourth installment, 2009. Okay. Now, how much they have given? 1,10,000. Write that fourth installment, 1,10,000. So, whenever, my dear students, please remember, when they are not giving the cash price of the asset, we have to start from fourth installment. Okay. So, fourth installment is 1,10,000 less interest. Now, how much interest they have given? That is 10%. Now, this installment, so you know the formula for installment. So, installment is equal to principal plus interest. So, we know the installment amount, right? Let us consider principal as 100%. And what the interest they have given? That is 10% interest. So, plus 10. So, installment is how much? 110. Now, if you take the fourth year, so how much installment amount they have given? As I told, if they give such type of question and they have given installment, so it means what it is? Inclusive of interest. So, how much they have given? 1,10,000 installment. So, we don't know what is a principal, right? So, we have to calculate the interest. So, for 110%, so we are having 1,10,000 and we want interest separately. So, for 10, how much? That is, interest is how much? 10%. So, for 10%, how much? So, cross multiply 1,10,000 into 10 divided by 110. So, how to calculate? That is equal to 1,10,000 into 10 divided by 110. So, this is how we are going to calculate the interest. So, why we have to cross multiply like this? Because this installment amount includes interest also. So, let us calculate 1,10,000 is the fourth installment into 10 divided by 110. So, we are not dividing it by 100. So, we are dividing it by 110 because it is inclusive of interest. So, when you calculate, you will get 10,000. So, fourth installment is 1,10,000 minus interest. So, we'll get 1 lakh. Next, add third installment. So, what is third installment? That is 1,20,000. So, add 1,20,000. So, how much you'll get? 2,20,000. Now, less interest. So, upon this amount, so we have to calculate the interest. 2,20,000 into 10 divided by 100. So, you'll get 20,000. So, when you less or when you deduct, we'll get 2 lakh. Next, add second installment. So, what is second installment? That is 2007, 1,52,000. So, add second installment 1,52,000. So, you'll get 3,52,000. Less second year interest. That is 3,52,000 into 10 divided by 110. So, you'll get 32,000. So, when you deduct this, so you'll get 3,20,000. Now, what you have to do? Add once again first year installment. So, first year installment is how much? 1,64,000. Now, less first year interest. It is 4,84,000. So when you add, we'll get 4,84,000 into 10 divided by 110. So we'll get 44,000. So how much is 4,40,000? So this is the amount payable. For that, add down payment. So they have given the down payment also how much? 80,000. Add down payment. So the total cash price of the asset is 5,20,000. Now how you have to do? Take the last installment, that is fourth installment, less interest, and you have to calculate for 110 because it is inclusive of interest. Next, add third installment, less interest. Then add second installment, less interest, add first installment, less interest, then you'll get total amount payable. For that, add down payment. So your cash price of the asset is how much? 5,20,000. Now, calculation of depreciation. Since we are going to prepare ledger accounts in the books of installment purchaser, so we have to calculate the depreciation. Now, what they have given? So they have given depreciation has to be charged at 10% per annum. So we have to calculate depreciation on the cash price of the asset. Now what is the cash price? 5,20,000. So each year we have to calculate the depreciation. So cash price of the motor car is 5,20,000 less first year depreciation. 5,20,000 into 10%, so you'll get 52,000 as depreciation. Next, you will get 4,68,000. But since we are following original cost method or straight line method, the depreciation will remain year after year. That is, same depreciation will be there. We have to calculate on 5,20,000 into 10% only, not on the written down value method. So we are following straight line method, so the depreciation will be same. Next, second year depreciation 52,000, third year depreciation is 52,000, fourth year depreciation is 52,000. So this is a calculation of depreciation. Since we are following straight line method, the depreciation will remain same. Now we shall prepare ledger accounts in the books of installment purchaser. Now who is the installment purchaser? Ambika Tourist. Okay. Now what are the entries that has to come under or in the books of installment purchaser? So first we shall prepare installment seller account. Who is the installment seller? That is Tata Motors account. So what we have to prepare or what are the entries that has to be recorded in the books of installment purchaser? First one is for purchasing of assets. So what is the entry? Asset account data, interest suspense account data, to installment seller account. So how do you record in installment seller account? By asset account, that is 1/1/2006. So by asset account. So what is the cash price of the asset? So we have already calculated 5,20,000. So cash price of the asset is how much? 5,20,000. Then what you have to record? So what is the entry? Asset account data, interest suspense account data, to installment seller account. So how do you record here? By asset account, by interest suspense account. That is on the date of purchasing of asset. So by interest suspense account. So now what the amount that has to be recorded here? So we have to add all the interest. Fourth year interest is how much? 10,000. And next third year interest is how much? That is 20,000. Next, second year interest, 32,000. Next, first year interest is how much? That is 44,000. So this is 44,000 is of first year, 32,000 is of second year, and third year is 20,000, fourth year is 10,000. So the total of this has to be recorded in interest suspense account. So when you add, so how much you'll get? Interest suspense account is 1,06,000. So this much total amount, that is only the interest. Only the interest of all the years has to be added and it has to be transferred to interest suspense account. So this is for purchase of assets. So your entry will be asset account data, interest suspense account data, to motor cars or Tata Motors account. So by luxury bus account 5,20,000, that is cash price of the asset. Next, interest suspense account 1,06,000, that is the total of all years interest. And the second entry is for what? Making the down payment. So what is the entry? Installment seller account data, to bank account. So how do you record? Installment seller is Tata Motors, to bank account. That is on which date? on the date of purchase. So this should be 1/1/2006. So 2 bank accounts. So how much down payment they have made? So let us see the question. So the down payment is how much? 80,000. So make the down payment, that is on the date of delivery of the goods, that is on 1/1/2006, 2 bank account. So how much? 80,000. And the third one is for what? Interest due. So interest account data to interest suspense account. So here we are not having any other entry. Next entry is for what? Installment paid. So what is the entry? Installment seller account data to bank account. So your fourth entry will be for installment paid. So 2 bank accounts. So this is for what? Installment paid. So how much installment paid in the first year? That is, they have given in the question 1,64,000. So write this 1,64,000. Next entry is for charging depreciation, where you don't come across installment seller account. Next, transfer of interest and depreciation to profit and loss account, where you don't come across installment seller account. So what are the entries to be recorded in the first year? So first one is for asset purchase. So asset account data, interest suspense account data to Tata Motors account, that is installment seller account. And the next one is for down payment made. So what is the entry? Installment seller account data to bank account. So we have recorded for down payment. And the third one is for interest due. So where we are not going to record in installment seller account. Next is for installment paid. So what is the entry? Tata Motors account data to bank account. So 1,64,000. So we have made the first installment. Now balance both the side. So when you balance, so you'll get so in your credit side it is 6,26,000, whereas in debit side you'll get a balancing figure of 3,82,000. Now what you're going to do with this? So you have to carry it down for the next year. That is 31/12/06 to balance carried down. How much? 3,82,000. Now come to the next year. Whatever balance you have carried down in the previous year, so you have to brought down in the beginning of next year. 1/1/2007 by balance brought down 3,82,000. So here your entry starts from interest due. So interest due you are not going to record in installment seller account. Next is for what? Installment paid. So what is the entry? Installment seller account data to bank account. That is end of that particular year, 31/12/07 to bank account. What is the second installment paid? So second installment is 1,52,000. So record that 1,52,000. Next is for what? Charging depreciation, you are not going to record. Next, transfer to profit and loss account, you are not going to record here. Now balance both the sides. So in your credit side is 3,82,000, whereas in debit side how much? It is only 1,52,000. So you'll get a balancing figure of 2,30,000. So this balance have to be carried down to the next year, that is 31/12/07 to balance carried down 2,30,000. Next, whatever the amount you have carried down in the previous year, that is in 2007, you have to bring down the balance in the beginning of the next year, that is 1/1/2008. By balance brought down 2,30,000. Here also you are going to make the third installment amount. So what is the entry? Installment seller account data to bank account. So 31/12/08 to bank account. This is for installment paid. Now what is the third installment? Third installment is 1,20,000. So record that amount, 1,20,000. Now balance both the side. The balancing figure has to be carried down. So when you add in the credit side, it's 2,30,000. Whereas in the debit side, you will get a balancing figure of 1,10,000. So that has to be carried down. 31/12/08 to balance carried down. How much? 1,10,000. Now come to the last year, that is 2009. Whatever amount you have carried down in the debit side has to be brought down in the credit side for the next year. That is in the beginning of next year. 1/1/2009 by balance brought down 1,10,000. Now you have to make the fourth installment amount, right? So 31/12/09 to bank account. Now what is the fourth installment? Fourth installment is 1,10,000. So write that 1,10,000. So when you add, so you'll get 1,10,000 both the side. It's nothing but we have made payment. So we have done with the payment in 4 installment. So this is how you are going to prepare journal entries in the books of installment purchaser. So the first account is prepared is installment seller's account. Now come to the next account, that is interest suspense account. Of course, I have told you, unlike hire purchase system, so here we have to prepare interest suspense account. So what are the entries that comes under interest suspense account? So your first entry, that is, what is the entry? Asset account data, interest suspense account data, to installment seller account. So how do you record? To installment seller, 31st/12/06, that is interest suspense account data to installment seller account. Here the installment seller is Tata Motors account. So what is the amount that has to be transferred to interest suspense account? So I have told you the total of all the 4 years interest has to be transferred to interest suspense account. So how much we have transferred? That is 1,06,000. The total of all interest is how much? 1,06,000. So first transfer that. Next entry comes for interest suspense account is for interest due. So interest account data to interest suspense account. So how do you record? So first year by interest account. So what is first year interest? So first year interest is how much? 44,000. So we have to transfer this interest, 44,000. So record that 44,000. Next, there is no other entry which comes under interest suspense account. Only 2 entries in the first year, that is for purchase of asset, and the next is for payment or the interest due. Now what you will do? So you will balance both the sides. So when you balance, you will get 1,06,000, whereas that is in the debit side. Whereas in the credit side, you will get a balancing figure of 62,000. Now 62,000 has to be carried down for the next year. That is 31st/12/06 by balance carried down 62,000. Now whatever the amount you have carried down in the previous year, bring down that balance. 1107 to balance brought down 62,000. Now for the second year, you will not have an entry for asset purchased. Directly go through the interest due. So what is the entry? Interest account data to interest suspense account. So how do you record? 31st/12/07 by interest account. What is second year interest? So second year interest is how much? So second year interest is how much? That is 32,000. So second year interest, record that amount. So 32,000. Now balance both the side. In your debit side, it is 62,000. Whereas coming to the credit side, you get a balancing figure of 30,000. Now this 30,000 has to be carried down to the next year. That is 31st/12/07 by balance carried down 30,000. Now at the beginning of next year, 1108. To balance brought down. So whatever the amount you have carried down in the previous year has to be brought down. That is 30,000. Next is for interest due. Interest account data to interest suspense account. So in the third year, 31st/12/08 by interest account. What is third year interest? So if you see the calculation, so third year interest is how much? 20,000. So record that 20,000. That is third year interest. Now as usual, balance both the side. So in the debit side, it is 30,000. Whereas in the credit side, you will get a balancing figure of 20,000. That is 30,000 minus 20,000. You get a balancing figure of 10,000. That is, that amount has to be carried down for the next year. 31st/12/08 by balance carried down 10,000. Now come to the last year, 1108. To balance brought down how much? 10,000. So whatever the amount you have carried down, that has to be brought down. Now for interest due, interest account data to interest suspense account. So how do we write? 31st/12/09 by interest account. Now what is fourth year interest? Fourth year interest is 10,000. So record that 10,000. Now if you add both the debit and credit side, you will get a total of 10,000. So here under interest account, you will have in the first year, you will have entry while purchasing of asset. Next is for interest due. Rest all the years you are recording entry only in case of interest due, and the balancing figure has to be carried on. In the same way, it goes on continuing till the last year, where in the last year both the sides will be equal. Now coming to the next account, that is asset account, luxury bus account. So here the asset is what? Luxury bus. Now what are the entries that has to be prepared under, or the account or the entry that has to be recorded in asset account? In the first year, you are purchasing the asset. So what is the entry? Asset account data, interest suspense account data, to installment seller account. Now how we are going to write in asset account? That is to installment seller account. Now who is the installment seller here? That is Tata Motors. That is on 1106 to Tata Motors account. That is for asset purchased. Now how much amount you have to transfer? That is the total of how much? That is the cash price, the total of cash price of the asset. So how much? 5,20,000. So your entry was asset account data, interest suspense account data, to installment seller account. So here how do you record? To installment seller. Installment seller is Tata Motors. So we'll record the cash price of the asset. Clear? That is 5,20,000. Now come to the second year. So second year for down payment, you have no entry relating to asset account. Next is interest due, no entry. Next is for installment paid, no entry. Next come to the depreciation. So what is entry? Depreciation account data to asset account. So how do you record here? By depreciation account, that is 31st/12/07 by depreciation account. Now what is the depreciation? Now go through the calculation of depreciation. So first year depreciation is how much? 52,000. And all year depreciation will remain same. That is 52,000. Since we are following the straight line method, so the depreciation remains same. That is how much? 52,000. So depreciation how much? 52,000. Now balance both the side, and the balancing figure has to be carried down. So 5,20,000 in the debit side, whereas in the credit side, how much you'll get? You'll get a balancing figure of 4,68,000, which you have to carry down. 31st/12/06 by balance carried down 4,68,000. Now come to the next year, 1107. Whatever the amount you have carried down in the previous year, that has to be brought down, right? So to balance brought down 4,68,000. Now depreciation as usual. So here you are not going to, so from second entry, you are not going to record for purchase of asset. Directly calculate the depreciation entry, or directly enter the depreciation entry. So 31st/12/07 by depreciation account. So as I told, depreciation remains same, 52,000. Now balance both the side. In the debit side, it is 4,68,000, whereas in the credit side, you'll get a balancing figure of 4,16,000, which has to be carried down. Next year, on 1108, whatever the amount you have carried down in the previous year, same amount has to be brought down. To balance brought down 4,16,000. Now come to the depreciation by depreciation account. 31st/12/08 by depreciation account. As I told, depreciation remains same. That is how much? 52,000. Now you balance both the side, it is 3,64,000. 3,64,000, and the balancing figure 3,64,000 has to be carried down. That is carried down to the next year. Now go to the next year, last year. So 1109, to balance brought down. Whatever the amount you have carried down in the previous year, that is 3,64,000. Bring down that balance to 3,64,000. Now fourth year depreciation is also 52,000. So write by depreciation account. How much? 52,000. Now balance both the side. So debit side is 3,64,000, whereas credit side will get a balancing figure of 3,12,000. Now that balancing figure has to be brought down to the next year. That is 11/2010, to balance brought down 3,12,000. So this is how you are going to prepare your asset account. In the first year, you have to record entry for asset purchased and depreciation. Rest all the years you will have entry only for depreciation, and the balancing figure has to be carried down. Now come to the last account, that is depreciation account. So as I told, when we are going to prepare depreciation account or when we are going to charge the depreciation, in all the years, since we are going to purchase entries in the books of installment purchaser, now installment purchaser is having an asset, so he has to calculate the depreciation. So once we have to prepare entry for charging the depreciation, next transfer that depreciation to profit and loss account. Now what is the entry for charging the depreciation? Depreciation account data to asset account. So which is the asset here? That is luxury bus. So depreciation account data to asset account, and that depreciation has to be transferred to profit and loss account. So your entry will be profit and loss account data to depreciation account. Now first we shall charge the depreciation. Depreciation account to asset account, that is 31st/12/06, end of the financial year. Asset is luxury bus. So as I told, depreciation remains same for all the years. That is how much? 52,000. So write this depreciation 52,000. Now transfer that depreciation to profit and loss account. By profit and loss account 31st/12/06, by profit and loss account 52,000. Now here both the side will tally. Now in the same way come to the next year. That is next year is 2007, 31st/12/07. Depreciation account data to luxury bus account, and your depreciation remains same 52,000. Now transfer that depreciation to profit and loss account. So what is the entry? By profit and loss account 31st/12/07, by profit and loss account 52,000. In the same way third year also entries remain same. So third year 31st/12/08 to luxury bus account 52,000. Now come to the or transfer that depreciation to profit and loss account 31st/12/08, by profit and loss account 52,000. Then last year also. So last year charging depreciation to asset. So 31st/12/09 to luxury bus account 52,000. Next transfer that depreciation to profit and loss account 31st/12/09, by profit and loss account 52,000. So this is how you are going to prepare your depreciation account. What are the entries to be remembered here? One is for depreciation charged and transfer of depreciation to profit and loss account. So you'll be having only two entries, and your debit and credit side will tally in each and every year, because immediately that depreciation will be transferred to profit and loss account. So in my next class, I am going to discuss about journal entries in the books of installment seller. So till now we have discussed about journal entries in the books of installment purchaser, and we also prepared ledger accounts in the books of installment purchaser. Next, we are going to record entries in the books of installment seller, and we shall solve a problem on installment purchase system where we are going to record journal entries in the books of installment seller. My dear students, hope you all understood the session. See you all in my next session. Till then, take care. Thank you.